Hello, I'm Mario Toneguzzi, and I'm taking care of business. Joining me today is Curtis Gallagher, Principal, Canadian Hospitality Lead for commercial real estate firm Avison Young in Canada. Thanks for joining us today, Curtis. And we're going to talk about the hotel market in the country. You folks recently released your 2021 Canada Hotel Market Report. In a nutshell, Curtis, tell me what the key findings were from that report.
Well, I think the key findings were it was bad and it's getting better. There's still some room to grow from an investment standpoint and operationally. But as we sort of rode that roller coaster of COVID and seeming like we had it under control, then Omicron hit and we shut back down again, it had an effect on people's confidence that, recovery was going to return and hotels were going to start to, get back to where they, were pre-COVID levels.
Okay. Now, obviously, the numbers, were they a little better, the numbers in terms of hotels, say the occupancy compared to, say, 2020?
It was, but again, from a percentage improvement standpoint, it looks great. But when you talk about the absolute values, there's still definitely some room to grow. Now, there's pockets where it's been successful. So, for example, resorts. Resorts seem to do quite well, particularly those four-season resorts, as people were unable to travel via air, and so were confined to, call it, these staycations, and resorts
Okay.
benefited that way.
Was there much in terms of investment activity in the market in 2021?
There was, and it was a tale of, I guess, two types. There was mostly, and it was about 60% of the volume was around change of use. So a hotel for affordable housing, for
Yeah.
redevelopment, or for seniors. And then there was some resort transactions that occurred that were fairly significant and strategic, and those sort of dominated the year. The traditional hotel transaction was not the driving force, but as we come into this year, we think that will be more of a return to normal.
And what about the impact, say for some of the border issues in with the U.S. I imagine a lot of our business comes from just south of the border, right?
Absolutely, it does. Yes. So that's always a challenge. And so there's two types of that. There's those that drive across, which was inhibited because of the vaccine and the passports and those restrictions, which slowly were lifted. And then the air travel version of that, which is also affected. But on a larger scale, if you're looking for, corporate business or group business to come from the States, and many of the major primary markets do, that might take a little bit longer to recover, just because of organizing around and getting these numbers to travel internationally for a conference. It's going to take a little time to get people back to that level.
Okay, we're into the first quarter of the year, if close to the second quarter soon, and what can we expect from the hotel market in Canada this year?
I think that we will see improved recovery on the operations side, and hopefully, as the government support sort of ends in May of this year, that the summer takes over to support and prop up the operational performance of hotels. And if that's the case, and the government support is no longer there or needed, and the hotels are starting to show performance improvement, that will give lenders and investors confidence to acquire, and it'll give sellers the comfort knowing that gap between a bid and an ask has narrowed to more reasonable levels. And I think the more traditional hotel transactions will start to occur.
Okay, super then. And when on the investment side, who is interested in buying hotels these days?
Well, there's still hotel owners, and there are new entrants into the market that have capital and say, you know, we've been buying industrial and we've been buying multi-res, let's say, and it's
Yeah.
very, very competitive. And so that's driving and compressing the cap rates. If you take a segment of your capital that you have available for real estate investment and take a contrarian view, you look at the opportunity to go after hotel where the spreads and the yields have often been very attractive. It's a little bit more risky, but if you're in a market of recovery, where better place to be than in an asset class that can respond to inflation overnight.
And right now, Curtis, when you're looking at sort of the categories of hotels, what are the most attractive right now? What do people want? What types of hotels?
Yeah, well, I mean, resort still seems to be in demand. People would love to buy those urban assets, but they want them at a discount that those discounts aren't coming because ultimately, even though the primary markets that require, international group corporate travel and business to occur, they're just not available. And you usually have some pretty well capitalized owners already owning these things. So people wanted to buy them at a discount that they're not seeing. And so you look to maybe some of these secondary markets where there's good demand and perhaps exceptional performance through COVID.
Hmm. I'm kind of curious in terms of the appeal of segments of the hotels. Uh, are hotels that are close to the airport and close to the downtown the more attractive ones for investors?
In general, yes.
Yeah.
Through COVID, it's demonstrated. If your travel gets shut down, obviously your hotel at the airport get affected.
Yeah.
But also, you look at the base of business that you need during a period like through COVID. You need a wide range of business, and a lot of it's international. So if you look at downtown Toronto or Vancouver, if the cruise ships aren't coming, or if the airplanes aren't coming, and the group business isn't happening, you don't have your core base of business to build up your occupancy, and your occupancy build supports your rate pressure.
All right. And Curtis, one last thing. I'm curious about the level of construction of, say, new hotels. Where are we at in Canada in terms of, I guess, supply? Like, in normal times, kind of erase the past 2 years, but if we were back to normal, do we have enough supply out there to meet the demand?
Yes, yes, we do. There are obviously markets where you might be contending with functional obsolescence of existing hotels that might be older stock, or as a market grows, Main and Main might have shifted a little bit, so it might require some new hotel product. But at this stage now, there will always be some new supply, and that's always absorbed into the market. And we're always pretty conservative in our Canadian markets with new supply. But now you're faced with, financing is even greater challenge for new supply, and the cost of materials is going to be even higher with, supply chain issues, inflation impacting, all aspects of development. So it's even as we recover, the pace of new supply coming will still be muted.
Okay, super. Thanks, Curtis, for joining us today.
Mario, thank you. Appreciate it.
All right, super. That was Curtis Gallagher, Principal and Canadian Hospitality Lead with Avison Young. I'm Mario Toneguzzi. This has been Taking Care of Business. Thanks for joining us today.